It's August 2022. There's a lot happening in the property market. What's going to be the future for property prices, the housing market, particularly with this recession that we're definitely going to hit in 2023. Today, to help us discuss all of that, I'm joined by my friend and Property Elevator co-star, I guess, John Howard. John, how are you doing, sir?
I'm not always your friend.
I know.
Especially when you're sitting there on Property Elevator and nicking the deal off me because you live within the M25. I mean, anyway, carry on.
I know. Anyway, we're going to discuss a lot. We're going to discuss the recession. We're going to discuss interest rates, how high they're going to go, the outlook for developers, the outlook for buy-to-let investors. But first, let's tell you a little bit about Property Elevator. Property Elevator is a bit like Dragon's Den. Property investors and developers come along to pitch their deals for funding from 5 property angels. We're on series 5 at the moment, and that is being filmed on the 6th, 7th and 8th of September. And if you want project financing or deal funding for your property project, simply apply to be on the show, propertyelevator.tv. Applications close 2nd of September. John, what are you expecting from our applicants for this season?
I'm expecting some better deals, to be honest with you. I don't know about you. And they're going to have to be better in the way this year because of the market, aren't they, Ranjan? Well, I know we're going to talk about the market. One thing I will say, though, is that there's not confusion about who should apply for the show. But what I would say is if you've found a potential deal, but you haven't bought it, you haven't even got it agreed yet, you can still come on the show with that deal and say, look, I can get this for us. What do you think? And I think that's important to remember. We have people who already own the property sometimes, don't we? We have people who have already agreed to buy it. But if you can still come if you've got found a deal, even if it's not agreed yet, we can help you get it agreed. And also, I find it's really important to manage that deal correctly right through to exchange. There's ways of managing the deal so it's to your advantage. And I think that's important.
And I think one of the differences, with this season's applicants for me is we're going to talk about recession, interest rates and all of that.
Yeah.
Interest rates will rise to deal with this recession, inflation crisis and all of that.
Yeah.
And that's a time when recession time is when you probably want equity investors, more of an equity mix as part of your deal, and also the experience of people that have done deals in recessionary environments before. And that's a big reason why that budding developers and entrepreneurs will basically need the funding from property angels on the show.
Absolutely. I've survived 3 property recessions. We may be having a 4th one, we may not. Who knows? Anybody who says they know exactly what's going to happen it's not true, because no one quite knows. We can only look at the past and look at what's happened in the past to gain some information and some knowledge of what might happen in the future. But absolutely right. This is the time when your experience, Ranjan, my experience, Nicholas's, not so much Paul, because he's in my view, he's more of an entrepreneur than a property guy. He's a property guy as well, and he won't thank me for saying that probably, but he's got less experience perhaps. And Helen's got bags of experience of funding in the difficult market. I mean, she was involved in the 2008-2009 crash at her merchant bank. So, and that leaves scars. And when you've survived 3 recessions, like I think you've probably survived 3 as well, Ranjan, it leaves the scar. There is a scar there, and you don't want to have to be in that situation, struggling potentially. I mean, the last one, 2008, I found I coped with that very easily, and it was a great time for us. And there are massive advantages, and with a recession, if you've got some capital and you've got some experience, but you need that experience really, I think.
And I think deal selection is so important because it is a fact that, the best deals I've done have been in recession times, and
sure,
there's lots of opportunity. And if your shot selection is right and you play the right shots, you can do phenomenally well in a recession.
The one thing that worries me, and I know you help lots and lots of people over a year, and I help a lot less probably in a different way, but the one thing that worries me when I talk to people, they're all trying to max out the deal. They're all trying to borrow as much as they can. And when you're coming into this type of property market, the last thing you want to be doing is maxing out. I can borrow 82%, 81%, and being super clever. You don't want to be borrowing more than 60, 65% maximum in a difficult market, in my view. Now, that's possible by coming on the elevator show, for instance, or finding or doing less deals, but better deals, and using your own deposits. So that's the one thing I find. You wouldn't get a captain of a ship looking at the forecast, and the forecast is serious waves and all the rest of it, and trying to go across the channel. Would you? They'd stay in the harbour until it looks a bit safer. And that's the problem. I find some people have no fear whatsoever, and that's scary. You need to have fear.
That's a very good point. I think part of that lack of fear is people not understanding what a recession is. Now, if you Google what a recession is, you'll see stuff about 2 successive quarters of negative GDP growth and all of that. But, as someone who's lived through and survived and prospered through many a recession, what does a recession mean for property investors, in your words?
It means the banks will lend less percentage-wise, or if you've got a loan with them, they may want it back. And I've had that done to me on a few occasions where I've had no problems, but the bank are struggling, and the bank say, well, John, can you pay us back in 6 months? If so, we'll take a bit of discount, or we'll force you to do it. And the other thing is, in 2008, I had no personal guarantees whatsoever. I was feeling very smug. By early 2009, Ranjan, I had loads of personal guarantees again, because the bank said to me, look, John, the market's dropped 25, 30%. Unless you want to put the cash in to balance it up, and everyone's portfolio is different. Mine hadn't dropped much at all, but that's what you can't argue with the bank, really.
But John,
you've got 2 choices. You can either put the cash in to balance it up to keep your mandate correct, your banking mandate correct, or you can sign some personal guarantees.
But John, I mean, in every recession, sometimes the problem and symptoms are slightly different. And in the last one, the banks were weak, and the Bank of England and the powers that be put in several measures to make sure that banks were stronger, much, much stronger to withstand any other shocks. So whether that will be the problem this time round, I'm not entirely sure. Because the banks are a lot stronger than they were going into 2008.
Well, I don't know how many what we call clearing banks, the top 5, the big 5, we call them, don't we? I mean, I don't think anybody borrows from those top 5 now anyway, probably. What's come along since 2009, as you know, Ranjan, is all these so-called banks. They're not banks, they're bridges, let's be honest. They're not banks, they're bridges. They're people with a load of money who have said, you know what, we can get 10, 12, 15% off people if they're borrowing on property. So let's charge it out. Let's use our own money or borrow it off the Bank of England and then lend it again, or borrow it from an institution and lend it out. And that's what they're doing. And what they've done, they've lent to a lot of inexperienced property developers. I'm not saying the investors have got an issue at all, potentially, but certainly the developers have. And they've lent to a lot of very inexperienced developers. And up to now, those developers have got away with it because the market's gone up, inflation's gone up, prices have gone up, build costs have gone up, but it's leveled off. They've cancelled each other out. That's not going to happen, Ranjan, in the next 18 months. And I've just launched, or just about launched, my recovery fund, where we buy part finished stock. We're busy buying some of it already. There's more and more of it coming on the market, and we're getting contacted by different receivers and banks to say, look, we've got this. Can you, do you want it? Can you do something with it? So I think that's the issue going forward. I mean, the one thing I would say, and you may disagree, mainly because you've got a very large, no doubt, rental portfolio, and you'll be biased towards this, maybe, I don't know, is that I can see rents going down. And the reason I can see rents going down is because that's the only thing that can move. If you've got energy prices that have doubled, you can't negotiate with them. Your council tax, you can't negotiate with that. Food, you can't negotiate with. The one thing you can negotiate with is with Ranjan. So badly, probably, because you'll come on the wrong side of it if you negotiate with Ranjan. But what I'm saying is that potentially in the past, rents have done very well in a recession because people can't buy, so they rent. this time round, I think that might be difficult to sustain some of the rents that people get, especially with the HMOs and stuff like that.
Now, I think that's good. I mean, this is the whole point of this video, because no one really knows. We are just giving the benefit of our opinion. And I don't agree with you, John. And I'll tell you.
Well, that's a surprise, isn't it? I wasn't expecting that much.
But what's happened in recent times is that the availability of private rental stock has fallen. A lot of that is because of the Section 24 tax on mortgage interest rates. So a lot of the accidental landlords and people who are higher rate taxpayers who just had one or two properties has quite frankly exited the market. That has caused massive problems. And what I see has happened over the last year is that because there's a shortage, I mean, we are finding that we have to do we get far more applicants per property advertised to let. We have to do far less viewings per let achieved than at this same point last year or the year before. And that's because of the availability of stock. So what that allows us to do is be picky on the tenants that we pick. So you tend to go for tenants who, like if a nurse in the NHS is applying, they will get the place over a freelancer simply because of security of income. And it allows landlords to be far more picky with their referencing. So where there's going to be a massive problem is with people who don't have stable employment or guaranteed income levels. They will not be able to get a rental property. We're going to cover a story from Ireland in a future video, which showed a queue of more than 100 people queuing outside a rental property advertised to let in Dublin. Now, they introduced the Section 24 tax on mortgage interest rates a few years before the UK did, and they have suffered this mass exodus of landlords and a diminishing supply of private rented property, to the extent that there's 100 people queuing outside for a viewing outside one rental property in Dublin.
Yeah, I can see why that would be in Dublin. And with all due respect to your portfolio, I can see why, you've got no doubt a very nice portfolio in very nice areas. But not everyone has, Ranjan. We're talking about the whole country and not just within the M25.
Got a few.
It's simple as that. And I can see. Well, first of all, young people end up moving out and going home to live at home because it's cheaper. That's the first thing that happens. But also, I just think, some people just won't be able to afford the rent that they're being charged. And if the landlord doesn't want a vacant property for a month or two, which, by the way, counts as any increase you can get anyway, then they're better off to keep it occupied and reduce the rent if they need to help the tenants to keep them there. A little bit like what happened during COVID with the commercial tenants. They couldn't afford to pay the rent, and on occasions we've had to negotiate it down short term. And I think it could be the same thing with the rental stock, because there's an awful lot of people, and by the way, the rent to rent guys and girls and the HMO ones, where they're paying the electricity bill and not being able to pass it on, they've got all sorts of problems.
Oh, they're stuffed. I think we can agree on that.
Totally.
We can agree on
Ranjan, that. Good. At least we agree on something.
But I don't think we disagree on the other point, actually. I think what we're saying is it's a market by market and a region by region picture. In areas of low demand or low affluence, then there is going to be a massive issue with rents. I personally believe so, and that's we just have to see. No one really knows, but it's all based on experience and professionalism, isn't it? Really, and at the end of the day, I don't think this is the same as the other recessions we've had. If it becomes a property recession, it's going to be a recession. I don't really care about the recession as much at two quarters or whatever. So what? It's all about what people can afford, and it, they're all saying that it's inflation's at 12%, 11%, 10%. What a load of rubbish that is. It's well over 20%. If for people who are buying things every day in the shops and the energy and petrol and so on. Petrol's come down a little bit, I know, but it's over 20% over 12 months that it's gone up. That things have gone up that people buy every day. But this is a strange recession because it's not a recession because of the economy is doing amazingly well and we're overheating. This is just an energy price spike. And really, by raising interest rates just seems the wrong solution to this particular problem. It's a great way of fixing inflation when the inflation is caused because the economy is overheating. But if we're all forced to pay more energy prices, raising interest rates is not going to cure that.
No, it's not. As you know, I'm no economist, but I agree with you. I think they're going to go up again by 0.5% next month. After that, I'm not sure they can afford to put them up too much, because I think exactly like you said, it would have a detrimental effect. Interesting that inflation is sort of peaked by looks of things in Europe and America. So that's quite interesting. Whether it will do the same thing here. And I was talking to a friend of mine who builds a lot of. He's a contractor, and he had a job priced 4 months ago. Went to price it again the other day because he's got the go ahead. And interestingly, some of the material prices have come down in the last 4 months. Plasterboard, timber. So that's that is encouraging at least.
So on prices then. Property prices, because I always believe that we should talk about property prices and value as two separate things. I think inflation has gone up so much that actually the value of property prices has not kept up, but the price has. But prices have fallen in July by 0.1%.
I think that's the start. That's the start. No, that's the start, Ranjan. Very interestingly, you don't sell anything, so you're not really qualified to talk on this, are you? Remember?
Neither of us are. We're just having a guess.
I'm qualified. I'm selling millions of pounds worth of property every year. With all due respect, Ranjan.
Go for it.
I'll take over from this bit if I may. So, two things are happening at the moment. First of all, none of the major house builders, and I've spoken to a few of them, can believe the market's carried on as it has. They can't believe their luck. Secondly, in the last few weeks, there's been a lot of down valuations by valuers. Now, that's the first sign of trouble, when the valuers start getting nervous. The next sign is the banks getting nervous because the valuers are getting nervous. Yeah. So it's all starting to kick off. I've got 6 estate agencies in Norfolk. Things have slowed down dramatically in the last 6 weeks. If there's a property that's very nice, yes, you'll get buyers on it and it will sell.
But John, how much of that is seasonal? Doesn't everyone go to sleep in August anyway?
No. A lot of people with money go away in July and are back in August. We've had August has been some of our best months in terms of selling over the years, interestingly, in terms of estate agency. But the one sign I think you'll see quite soon is the big developers saying on their big board that says luxury 4-bedroom houses, there'll be a little sign that says part exchange available. And when you see that, you know they're in for a tough time.
Yes, you're absolutely correct. I always say the sign of the turning market is when developers are offering more incentives because they don't want to reduce price. So you'll see furniture packages offered. Some people will throw in a car. They'll be throwing in all sorts of stuff without reducing the price.
I've done it all over the years. But the one thing that's happened to us recently on 1 or 2 sites we've got where people have bought early, agreed to buy early, got their mortgage offer before the properties are ready. The mortgage offer is running out or has run out. They go back to renew it and they're going to have to pay more interest. So they pull out. So that's happening quite a lot as well. So the signs are not good. The signs are not good. So don't over borrow is so important. Don't over borrow. Be sensible. If you were going to do 4 deals, but on the last one was on the back of the fact the other 3 you can borrow a bit more money on the other 3. Don't. It's not
one thing I'd be saying to our viewers is one of the big signs of this all kicking off is what we see from the auction season, which is going to kickstart again in September. Barometer for the market, what happens there will happen in the retail market pretty much 3-4 months down the line. I always say 6 months, but on this occasion, I think you're right, Ranjan, 3 or 4 months. I owned Auction House UK.
So, I've been buying and selling auction like you have for 30, 35 years. And it's the barometer of the property market. So whatever starts to happen in auctions, and a very good friend of mine who's one of the top auctioneers in the UK said to me 3 months ago, John, I'm really worried now. But it's carried on. It hasn't, he's had very good results. So, but those results are going to start to change. They've got to change. You can't be going through a major upheaval, financial upheaval, inflation, interest rates going up, and all the rest of it, and not affect the property market. The property market will be affected.
Now, I hope you're liking this discussion. Obviously, smash the like button and subscribe to the channel. Click the bell icon so you're notified when we upload new videos.
Ranjan, can I just ask you, where do I send my invoice for this?
We'll bill you at a reduced rate. Don't worry.
Yeah, very funny.
Now, what we've talked about is a bit of negativity, really. But what I've found with recessions is that it always catches the inexperienced or the people that go in with blinkered vision, just hoping to ride on the crest of the wave of a boom. And then when the market changes or the music stops, they just haven't got a clue, simply because they haven't taken that into account. But of course, you and I have done great deals in recessions. What are your tips for how people are going to actually adapt their game over the next year?
Well, the vulnerable people are the people or developers. The vulnerable developers are the ones that have got property half finished, or 3/4 finished, where the build costs have gone up and sell prices now go down, and they have difficulties with the banks and so on. And if you're in that situation at all, don't try and finish all the properties in one go. Concentrate your money you've got left on getting the first 2 or 3 completed, so you can sell those, prove to the bank that you've got money coming in, and then they'll let you have that money again to finish the others. Sometimes at the start of a recession, it's all about getting your capital back, your dealing money back, and burying your head in the sand for 5 years and telling yourself, well, in 5 years' time it will improve and I'll get my money back in 5 years' time, is a total waste of time. If you need your dealing money, your cash, in other words, to get out there and start again at a lower level to make sure you make some proper money going forward. And you can do in this market, but you need to anticipate what the market's doing, and you need to move quicker in terms of reducing prices and getting them finished than anyone else.
So what are your strategies then for profiting from the opportunity? What opportunities do you see in this recession?
Well, I've always been very keen on part finished stock. Someone called me a vulture, which was slightly unkind, I felt, the other day, Ranjan, but I took it as a compliment. So we've got a recovery fund we're just launching where we purchase part finished property off receivers and banks, but also if someone has got a problem and then they can see they're getting, anticipate that problem, then we can come in, put some money into the deal to get it finished and sold and share the profit with them. So really, that's an opportunity for people, and it's a great opportunity for us to use all our experience to go around the country and do this. And we've just bought 2 sites in Scotland, part finish, another one in Birmingham, part finish. We're looking at 2 or 3 others, and we've got the ability to buy quite a few more. So that's what we're doing. I don't want to start any new projects.
I don't know if you agree with what I'm about to say, but I think what we're going to see for the first time in many, many years is a rise of repossession sales in all sectors of the property market, because interest rates, I think, will probably hit 3% relatively soon.
Maybe 3.5%. I think 3.5%. I don't think they'll go any more than that. But interestingly, the government, especially we've got an election in 18 months' time, don't forget, it's not long. The government hate to have the publicity of people losing their homes. Hate it, because the government are all about, this government, the Conservatives, all about home ownership, taking responsibility and so on. So they hate to see that. It will happen. But what I would say, there's 3 types of, I'm talking about developers now. We'll talk about investors in a minute, but developers, there's 3 types. There's the really ballsy ones that when there is a recession, whenever it is, they go bust, and they go bust very quickly because they're always on the edge, always borrowing too much money. That's the first year of a recession. The second year are people who, not bad developers, sort of know what they're doing, but a bit one track minded. They want to complete it all. They want to do it lovely. It takes too long. They then get into trouble with the banks. And then after 3 years, we all get into trouble because the market's dropped 30-40%. How can you manage that? It's very difficult. So that's what happens. There's a three-pronged situation, I think. With moving on to the investors, if you've got a long-term buy-to-let mortgage, so what? The market goes down 10, 15, 20%. You've got it on a long-term mortgage. As long as you can keep it let, okay, you can't remortgage it every 3 years like you've been doing and having a nice holiday or buying another property, which is good for us, Ranjan, because it means the market's is not going to fly up. So, but these people are going to be absolutely fine. The buy-to-let type investor with the long-term mortgage are going to be fine. The ones that are not going to be fine are the ones on the overdraft. If you've got an overdraft with a bank, the bank can pull that overdraft in. They can change the terms on it. They can do all sorts of things to you.
One thing I'm very excited about are the opportunities for commercial property, because with the recession, what we are basically seeing is a massive squeeze of discretionary spend, because people have to spend money on interest servicing and they have to spend money on utilities. So there's less money for restaurants and anything that's discretionary. So any business that whose customer base is based on discretionary spend of consumers, they're going to be adversely affected. And if they occupy commercial properties, then obviously those are going to become more available. Plus, we've got the accelerating bank closures and betting shop closures and all of that.
Yeah.
And then we've got the permitted development rights that allow these things to be repurposed. So I see a lot of opportunity for commercial property stock and developing residential units in a much shorter time horizon through permitted development than through traditional development, because the planning is far simpler and the fabric of the building already exists and pretty much is internal conversion. So you have a lot quicker time horizons. Are you excited about those sort of opportunities?
Well, I'm not excited about someone who's obsessed with PD like you are. No, I'm not. But I tell you what I am excited about. And that is that I'm in the process of buying three commercial sites at the moment, all between £1 and £2 million. But my rule is I don't buy these empty buildings unless I find a tenant first to go in some of it. That's the trick, because although you can do PD and a lot of them and all the rest of it, sometimes it's best not to. It's not always best to do what you can do. Just because you can do it doesn't always mean you should. I accept in London where values are very high, residential values are very high, Ranjan, I understand that.
It's a case-by-case basis. You're absolutely right.
Case-by-case
commercial
basis,
to commercial conversion is worthwhile as well.
Exactly. But certainly with the commercial I'm buying, I've already got tenants lined up before I bought them for some other site. And that takes the sting out of them and makes them incredibly cheap.
John, I think what you've just summarised is what I believe is the absolute key thing for anyone pitching a deal on Series 5 of Property Elevator, which is they're absolutely clear on the exit. In the market that we're going into, when the five of us are sitting there and we're seeing these deals pitched to us, you as the pitcher, if you're looking to pitch your deal on Series 5, then you need to be clear about your exit, and you need to have a plan A and a plan B and a plan C and show how you will mitigate all the risks.
Yeah, absolutely. We're in the process, or we're buying 5 different development sites, stroke investments at the moment. And every one of them, if the market really crashes, every one of those I can rent and it will wash its face on a decent yield. And that's what I want to hear. I want to hear from someone who is cautious. I know it's a difficult blend sometimes to be an entrepreneur, an investor, developer, and be relatively cautious. But surprisingly, I am, and so are you, Ranjan. You're more cautious than me, probably. So it's really important. It's not all about being ballsy and walking in and saying, here I am, I'm the dog's doodahs. It's all about saying, look, this is what I think we can do. But if we can't do that, this is the worst scenario. I want to know the worst scenario. Helen Chorley definitely wants to know the worst scenario. So come with a plan of at least 2 or 3 different scenarios where we're not going to lose our cash, because cash is king. And if we're putting in the money into this deal, we might be borrowing some, the rest is our own money probably. You've got to make sure that you protect us. We'll protect you with our advice and knowledge, but you always have a job to do here, to protect us and make sure that you're being responsible, and that at least we get our money back. Because like I said, in a recession, sometimes you're just happy to get your money back on a deal. It's not all about profit. Sometimes you want your million or 2 million or whatever it might be back to go again on another deal, which will be good. So
I would rephrase that as in a recession, the worst case scenario that you should be looking at is to get your capital back. But of course, you're doing it to be much, much better off.
Yeah,
than that.
But if you can get your capital back, and we've all done that, it hasn't gone well. Sometimes we've lost some money. Sometimes we've broken even. Hopefully, it doesn't happen very often, and we know the signs when it's going to happen. So we anticipate that. But even so, I know as a long-term investor, which you are, Ranjan, more so than I am, you're under less pressure on a daily basis than I am. I understand that, and that's your bag, and that's how you become incredibly successful. I mean, from my point of view, I think that's bloody boring, and I want to see I like to get up in the mornings and think, great, what's the challenge? But we're all different, and I think having that ability to have 2 or 3 options is very important. The other thing that's really important is the print. When you bring in the appraisal, we only see it for 5 minutes, don't we, Ranjan? Before that's the whole idea of the show, is that we only see it for 5 minutes. So you want to have a summary on the front page. You've mentioned this before, but can I just say, can you print it quite large? Because my eyesight's not very good these days. So if you can print it quite large, that would help me.
Yeah, so if you've got a deal, of course, propertyelevator.tv, we film 6th, 7th and 8th of September in St Albans. Applications close on the 2nd of September. So if you found a deal, or you got a deal and looking for funding, and you're looking to have a business partner for that project to help you steer it through a successful completion, then apply and come on the show. And I think, John, more than ever, we are going to be in this series providing an even more valuable role than ever before, because I think in previous series, I think you'd agree that debt financing has been pretty straightforward. Interest rates have been at record low. There's been plenty of competition. Now, I believe obviously the interest rates are going up. Perhaps the percentage loan to values that lenders will be willing to lend will go down a little bit.
Yeah, definitely.
And key thing will be equity funding and having someone on your team or people on your team with experience. I think that's going to be essential. So we are going to be providing an even more significant role than in any of the series before, I think.
I think so. I think it's so important not to over exaggerate, sale figures, build costs being lower than they should be. We're going to find, we find out, we look at it and we know. If you come in with a build figure of £70 a foot to convert a flat, we both know, all 5 of us know that it can't be possible. So you need to under promise and over deliver. I think that's important with any backer that you're looking to work with. It's so important. The other thing I would say is that Nicholas has probably been the most ballsy one over the years so far. It'd be interesting to see how ballsy he feels now going into the autumn, whether he's going to be as ballsy with some of the deals he's done, or whether he's going to be more cautious. A good opportunity to meet us all as well. And I think that's the other thing. You might bring a deal that doesn't get funded this time, but you've met us, we've met you, hopefully we like you. And of course, you've got a relationship with us. So you can then email us or contact us at any time after that, probably, and say, look, guys, girls, I know the deal wasn't good enough, but I've got another one. And we all look at it because we're dealers and we're investors and we want to make money. So I think that's quite important. The access to the 5 of us is quite important as well.
And I think, this is a fantastic time because we've talked a lot about, a lot of people, a lot of amateur investors are going to be guided by fear. And I think the people that are successful have a different mindset. they look upon this period as opportunity, as a period of opportunity, not as an opportunity of fear. And of course, that doesn't mean you're just going at anything. You're making sure that you are properly evaluating all the risks and coming up with a clear plan for mitigating those risks and all the rest of it. But it's not having that fear mindset and having an opportunity mindset. And I think there's a relatively small number of people that switch that mindset or have that mindset. I went on some bank viewings yesterday. I went to view 3 banks for sale, and they're all block viewings and stuff like that. And I must say, I saw, it's the holiday season, I know, but I saw fewer people at those viewings than I've seen, say earlier this year and at last year. And I think there is a factor that there is more opportunity out there simply because there are fewer people with the mindset to look for that opportunity in periods like we got now.
Totally. And also, these agents are now looking at people and saying, okay, it's a little bit less than the other person's offer, but I think these guys have got experience and they can perform. It's not always about the best price in a tough market. It's about this needs to be sold. Who are we going to sell it to? Because if they mess about with someone for 3 or 4 months, it falls through. Potentially, they put it back on the market. We're not likely to offer the same money. It's going to be less probably because we know they're on the ropes. So that's really, I think that's really important. But it's a difficult balance, Ranjan, isn't it, between being a property entrepreneur and being really positive and dynamic and being cautious. There's a balance. And people think I'm really ballsy. They think you're really ballsy. The truth is we both try to de-risk everything before we buy. That's the truth. That is the truth. We're not shutting our eyes and just signing the contract, and hoping for the best.
Absolutely. We've talked about clear exits. We've talked about lots of opportunity, particularly in August with so many people away. And I think the fear of recession and interest rates beginning to take grip a little bit. So there's plenty of deals that are out there to be had. And I think you raised an absolutely key point just now, which is when you are putting those offers forward to agents in particular, then the credibility of your team, the credibility of your backers is going to be absolutely critical rather than price. Because no one wants a sale to fall through and then the property to be back on the market in 3 months' time, because who knows what the market's going to be like then.
I think that's absolutely right. I really do, and there's no coincidence that we're just finalising 5 deals at the moment, and that's probably 4 more than we did last year.
And there's plenty of stuff being done in August right now. So get out there, look for some of these opportunities, whether they're commercial to residential conversions, they're new builds, whether they're simple property renovation projects. It doesn't matter what the project is, your age, your experience, your development experience, whether as long as it's a property related project and you're looking for funding and also help from experienced property investors and developers to be part of your team, then you need to come and pitch your deal to us on Property Elevator. We film on the 6th, the 7th and 8th of September. So you've got to be available on one of those dates. The application process is simple. It's via the website, propertyelevator.tv. You can also go on propertyelevator.tv to binge watch the last series 4 of Property Elevator. And I recommend you do that. Watch the last series to see the good and bad pitches. And,
spot on.
And think to yourself when you watch those pitches, well, just put yourself in our shoes. Would you invest? Would you invest your hard-earned cash in this pitch? And then you learn what works and what doesn't work.
Can I just say one last thing, Ranjan, and that is that can you please confirm on air now that you are going to buy me lunch or dinner? No, dinner actually, because you owe me 2 dinners. Dinner on one of the evenings. Can you just confirm that?
Well, John, it's a recession, so whatever the meal deals are at Tesco, you got a free choice.
Well, at least pay for the main course. I'll pay for the starter. How's that?
Absolutely. Brilliant. So, yes, get your applications in now. Applications close on the 2nd of September. And let's work on some projects together. don't pick John or any of the other guys. I mean, pick me really, and we'll do some great business together. John, anything to add?
Well, if it's within the M25, to be fair, Ranjan has probably got more experience than I have. But apart from that, he definitely hasn't.
So you want the rest of the country and just leaving me with the M25?
Well, I'm leaving you with the best bit, Ranjan, to be fair.
Well, let's battle it out when you come and pitch, along with the other three, of course.
Definitely.
Okay, brilliant. John, thanks for giving up your time. Are you on holiday today?
It's a pleasure. No,
Working
always
hard?
working, always dealing. We're not like some people.
Well, on that note, let us know what you think of this video. Right time to invest. How are you going to capitalize on this recession? Let us know in the comments below, and also apply to be on the show and binge watch series 4. John, thanks very much.
It's a pleasure. See you on the 6th of September.
Yes. Okay, bye for now. We'll leave you with some clips from the last season of Property Elevator and details of the application process.
Even if someone comes and doesn't get what they want, they've learned so much.
Yes.
And actually, we might have saved them.
Yes.
Saved them from making a big mistake.
I just knew it. I love it. It's the best thing I've ever seen.
Well, my view is more the merrier.
Good choice.
Brilliant.
Well done.
Fantastic.
Well done.
And if you can do 1-bedroom flats for 26k a flat, I'll actually give you 35k and you can do mine.
$750, right?
Yes.
Do you know how high on the price you can go? What number does it not stack at anymore?
Thank you. And thank you, Paul, as well. But
So
you know,
you've got to make it.
Thank you, Paul, but bye-bye,
You've
Paul.
got to, when someone comes in and says, I'm going to produce a premium product, alarm bells ring.
Have you got a deal that you'd like funding for? If so, we'd love for you to apply for the next series. I'm Elizabeth Warburton, and you've been watching Property Elevator.